Hello. Energy markets moved higher this week as an escalating standoff between the US and Iran over the Strait of Hormuz kept geopolitical risk premiums elevated across oil, gas and power. Record low storage for the time of year, weak wind generation and rising cooling demand added further upward pressure, while only carbon offered any real relief. So let's take a look in some more detail. Monday built on Friday's $1 per barrel gain, with prices pushing higher as the weekend passed without any breakthrough in US-Iran talks. Iran said its agreement with Oman on new shipping lanes through the strait was nearing completion, though a full reopening remained conditional on the US meeting a further list of demands. Tuesday saw further gains after President Trump demanded compensation for war-related damages before the strait could reopen, pushing hopes of an immediate deal further out of reach. Shipping traffic through the waterway slowed to just 6 vessels, well below the 10-day average of around 11. Wednesday took prices to a new weekly high as doubts deepened over any near-term resolution, with attacks reported on 2 vessels adding fresh risk premium. By Thursday, the initial 60-day US-Iran negotiating window was heading towards its 16th of August deadline with nothing resolved, keeping prices supported, though forecasters trimming global demand expectations for the rest of 2026 capped further upside. Prices opened softer this morning as markets weighed up weaker demand outlook. Brent closed last night at $87.82 per barrel, which is higher by $5.41 per barrel compared to last Friday. Monday opened in bullish fashion after prices had fallen at the end of last week on downward revisions to this week's temperature forecasts. Iran commented that its agreement with Oman would not be enough to reopen the strait, while the US signalled it wanted to keep up economic pressure. Gas pushed towards a 2-week high, with around a fifth of global LNG flows still affected by disruption in the Persian Gulf, and European storage on track to finish 10 to 15% below last year's levels by October. Tuesday brought a correction, with prices selling off some of the previous day's gains, though low renewable output kept gas for power demand firm in the prompt, and increased LNG buying interest in the Mediterranean added competition for cargoes bound for the UK. Prices returned to bullishness on Wednesday morning as hopes of a near-term US-Iran deal continue to fade, with futures climbing as much as 3.4% intraday. Thursday saw prices rise again as the negotiating deadline loomed, and fall in wind generation lent further support to the prompt. Storage remains the key concern heading into winter, sitting at just under 59% full against a 5-year average of 76%, the lowest level for this time of year since records began in 2009. Last night, all contracts closed higher than last Friday. Winter 26 gained 13.8 pence per therm, while summer 27 gained 5.6 pence per therm. Prices tracked gas higher on Monday and was further supported in the prompt by wind generation forecasts, some 20% below seasonal average. Softening carbon allowed for a little bearishness further along the curve. Tuesday saw a pullback tracking the gas sell-off, though French prices bucked the trend on nuclear curtailment, compounded by heat-related outages expected to peak near 10.7 gigawatts, and a jellyfish influx forcing further reactor shutdowns, which limited declines elsewhere. The market traded higher throughout Wednesday's session, and then Thursday brought further gains, supported by gas, with high temperatures and low wind generation at just 3.6 gigawatts, which added extra support to the prompt. Last night, all contracts closed higher than last Friday. Winter 26 gained £7.7 per megawatt hour, and summer 27 gained £0.75 per megawatt hour. You can download the full version of this report from our website. Thanks for watching. We'll see you next week.